In this video, you will learn a setup to help you profit substantially in the first 10 minutes of a trading session. This is a powerful and proven trade that can be used in worldwide markets and not just the US. We're going to teach you the step-by-step details of the setup that helped one of our firm's newest traders experience his best trade of the summer. Now, often you hear that you can't make money right on the open. Well, stick around for the trade and the trade setup that's going to help you do just that. Hi, I'm Mike Bellafiore, managing partner of SME Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic, One Good Trade and the Playbook. Click our subscribe button so you don't miss any of our trading videos produced for the trading community. In this video, we're going to discuss an opening drive trade. It's one of those setups that you can take in the first 10 minutes of a trading session to trade profitably. And it has the variables of a news catalyst that's unusual and unexpected, a stock gapping up or down more than 3%, and in this video we're going to show you one that's gapping down 14%, pre-market and after hours charts that are trending in the direction of the gap. Another variable is lower or higher in the pre-market than the after hours and in the direction of the gap. Below or above key levels, key technical longer term levels in the direction of the gap. Elevated R-vol. Those are the variables that are key to making a really good opening drive trade. If you want to learn 4 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money trader, check out the free webinar that we're currently running. Just go ahead and click this link to sign up for free right now. You're going to learn more in a couple of hours from this video, from this webinar workshop, than from years of online education. How to profit in the first 10 minutes of trading. The trade setup to use. This is what we call an opening drive short trade. The strategy, the overall strategy for how you attack this setup, the opening drive short strategy, is shorter breakdown of the pre-market range support level, add on a shallow pullback with volume, with low volume, add when holding under a support level, cover into significant support levels from our daily chart, which we're going to show you, cover one lot after a full ATR move has been made, look for an extended move to the downside on high volume to signal exhaustion, and find a place to take final covers. What I love about this, and one of our traders who put this together was encouraged by me to do this, is when you're creating a playbook trade like this, think about a general strategy for how you're going to attack this trade. Think about how that's going to be best for you. And this trader, with my help, does that. It's not important the specifics necessarily of how he attacks this trade. What is important is that there are specifics and that they work for him and that you should be doing this for you. Variables for the opening drive trade. Here's how you spot them. Negative news catalyst that is unusual and expected. Look, you can make this opening drive trade to the long side and to the short side. I'm going to give an example to the short side. A lot of you don't understand how to, maybe you haven't had a lot of experience shorting. Let me walk you through that. But you can take this trade in the long side, flip what we are teaching, take the mirror image of this, and make this into a long trade as well. But let's do it from a specific trade from the short side. Negative news catalyst is unusual and unexpected. That's one variable. Gapping up or down more than 3%. In this case, it's gapping down 14%. Pre-market and after hours charts trending down. So the pre-market chart, the after hours, the stock was trending down in this scenario. And then in the pre-market, the next trading time interval, it was also trending down before the first open. Lower in the pre-market than in the after hours. So it's trading down in the after hours and trading even lower. That's hugely important in the after hours to make a short opening drive trade. Below a key longer-term technical level. In this case, we're below that 230 key technical support level and elevated R vol. We want to know that there's more volume coming into the stock on a given day, showing that there's big institutional order flow that's coming into this particular idea and behind you. The fundamentals for the stock. You've got AVGO. They develop and design and sell semiconductors. They're gapping down off the news of acquiring CA Technologies for about $19 billion with a B, using cash on hand, and $18 billion in committed debt. This news was drastically negative because the buyout was seen as an act of desperation after the acquisition of Qualcomm fell through. Additionally, AVGO paid a 20% premium and is taking on substantial debt. So the key here, and the reason why the stock acted negatively in the after hours and the pre-market, is that the market players don't like this acquisition. This acquisition is surprising to the street because of the risk that AVGO is taking on, and the street is saying you're taking on way too much risk. You pay too much of a premium for this particular stock. Institutional ownership in this name is 85%. Love looking up institutional ownership. When institutional ownership is high, you're going to have big players that are going to come into the stock that are going to sell it off for 1, 2, 3 days, because institutions take days to exhaust their sell orders. Once they get started in a particular direction, it's like a cruise ship. It's very difficult for them to turn around. They've got massive orders. One of the great things about being an independent retail trader or a prop trader is our nimbleness. We're not trying to move 100 million shares. We can trade in and we can trade out. We can move in, we can move out, we can move on. Huge advantage. And an institutional player has got to dump when something like this is overly negative. ATR 5.3. ATR stands for average true range. It's how much a stock generally moves on an intraday basis. RVOL is huge, 13. Above 3 is big. In this case, it's 13. Market cap, this is a large cap, $101 billion. Macroeconomic outlook. Qs, all-time high, trending upwards. SMH, okay, that's the key index. That's the key ETF you want to be looking at when you're trading one of these technology stocks, one of the semiconductor stocks. That is the indicator that you want to be looking at to determine whether or not there's overall strength or weakness in the semiconductors. SPYs are rallying on the day, testing the upper edge of the range. We're in this, when we made this trade, there was lots of talk of the trade tensions between the U.S. and China. In this case, subsiding as the first wave of U.S. tariffs are implemented against China. Semiconductor companies such as AMD, NVIDIA, and Intel had strong opening drives, making highs in the morning. So good to check what your most comparative, good to go check the ETF that is most like the stock in the sector that you're trading, and good to go check the other stocks in your sector. On the daily chart, trading up towards the upper range in this case. On our 1-minute chart, knocking up against the upper part of the range, and you can see on this day we had a strong uptrending day in the SPYs. On the Qs, strong day on the Qs, busting above a short-term level we're seeing at 177.50. SMH on the daily chart in a choppy range right here, trading between 102 and 106. All right, so these pieces of information are helping us to inform our decision making. helping us to find extra variables to place for our trades, helping us to decide if we want to put on more risk or less. If SMH was miserably weak and had just broken an important support level to the downside, we'd want to be probably bigger in this idea. If SMH was roaring to new highs, that might give us pause that this could potentially bounce because the overall sector was really strong. SMH on a 1-minute chart shows its strength, has a good opening drive as it is, and holds above VWAP for most of the day. AVGO in a 3-year chart trending to the upside. Certainly one of the winners over the past 3 years. More than doubled. AVGO on a daily chart, 200 is our next support level below 230. That is going to be the next important technical support level of note. So when something is breaking down like this, you want to go look at your longer term technical charts and go find the next support level. And when something pulls into that next important support level, you've got a trade decision. Do I want to lighten up or do I want to look to see what's going to happen at this technical support level? But real good preparation when something's gapping down is where's the next potential support level? 200 here. I love this chart. This is a beautiful, perfect 10 downtrending chart. This is what a weak stock looks like. There are no bounces. Look at the stock. Look at the chart. This is how it's trading in the post-market, in the after hours we say, and this is how it's trading in the pre-market. There are no bounces. Not only are there no bounces, when it rolls over, it rolls over consistently. There is a systematic and consistent sell order into marketplace. There's not a lot of thinking that's going on here. The stock is weak, the sell order's in, and it's still on. This is a chart you really want to put into your memory of how clean and how smooth it is to the downside, how directional it is. AVGO on the 5-minute chart. In our case, on this day, it has that steep move to the downside. We'll dive deeper into that. Bounces off of that key technical 200 support level that we did a good job of identifying right here on our 3-year chart before the open. All right, so we don't just come in and say, hey, I think I'm going to short it and it's just going to go down for the rest of the day. Well, I'm going to short it, and if it's showing weakness, I've got to make a trade decision around the next technical support level. On our 1-minute chart, you can see a 210 level start to form in the pre-market. For over a half an hour, the stock can't trade below 210. It's trending to the downside, but it's getting hung up around this 210 level. Boy, if it could get below there. That's what I'm thinking about when I'm looking at a chart like that. Boy, if it could get below there. So 210 is acting as this minor pre-market support level. And we're watching it. It gets below that 210 level for a medium experience to experienced trader. I think that's tier 1 there. Assuming you haven't held it overnight, I think that's tier 1. I think it's 2 minutes from the open. It's close enough to the open. I think you got to short that. I'm going to leave that up to you, but I'm going to short that. All right, AVGO opens at 207 and flushes down to 205 before popping back up to 209. Remember, 210 is our level. So it's holding below that. And so the way that we want to be attacking this particular trade is we want to be a little bit short. We want to short 2 lots at 209 into this up move. When the bids are holding over 209, start to drop. And 210 rejects without even printing any shares at 210. So it comes up back towards that resistance level and changes. Shows us that weakness again. We can add a 3rd lot when the bid drops from 207, which was the opening price that held. We can add a final momentum lot when 205 bids give out, which acted as support from the pop to 209 on that opening candle. We can cover some as the momentum at 203 when the selling volume starts to slow. We want to take profits. Remember, into 200, we want to take profits when we're getting sharp moves to the downside. We want to think about taking profits if the volume is starting to wane into our down move. We can cover a lot at 200, which was daily support. And again, you had that trading decision. It's okay to get flat here. It depends on the way that you trade. But it's also okay to watch and see what's going to happen at 200 and look for this exhaustion candle. Wick, really steep down move. Volume increases. Classic blow off bottom. And you can cover the final two lots on 200 when the selling and the volume rapidly increase, showing that exhaustion. Sub 200 is also 2 times the ATR sell-off for AGO. So that's good to know. How much further can it really go down? Let's move 2 ATRs now to the downside from our particular sell-off below that level. Interesting. Okay, so love the work of setting us up for this 200 level. Love the 210 level that gets developed right here. Love how we're adding momentum lots into this. Love how we have a trade decision here at 200. Perfectly fine for you to be taking off into this 200 level based on price and miss all of this. Perfectly fine to be watching and holding. If you're going to take off into 200 as it's pulling in, you're going to be more of a consistent trader. You're going to have a higher win rate, and you're not going to have drawdowns as much as somebody who's looking for these bigger moves. There's no right or wrong answer there. It's the type of trader you are. All right, you a home run hitter, or are you going to be more consistent trader? I always want to do a trade review. How can we have traded this better? All right, so what did you learn today? You learned how to profit in the first 10 minutes of trading. You learned the opening drive setup. This is a setup that you can co-opt and start testing. Why don't you go and spend the next week and try and make this setup on the long and the short side, paper trade it or trade it with very small size, tag and measure results in something called TraderView, where you can get your trading results. Work on it. It's not something you're going to pick up right away. These trades that we're teaching you, you're going to have to internalize them and master them. Don't just make one of them and give up on it. Review it. How can you do it better? I hope, as always, the thing you're taking away from this video is not just the setup, which I think could be powerful for you, but also how to think like a professional trader. If you want to learn 4 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup to turn one of our traders into a 7-figure big money trader, check out the free webinar that we're currently running. Just go ahead and click this link to sign up for free right now. You're going to learn more in a couple of hours from this video, from this webinar workshop, than from years of online education. So go ahead and click our subscribe button so you don't miss any of the trading videos produced for the trading community. From all of us at SMB, trade well.